Old Mutual have released their annual financial results. In the 12 months ended December 2024, the financial player reported revenue up 4% at 8.7 billion rand, with adjusted earnings, headline earnings, coming in at 6.7 billion rand, up 14% on the year prior. Meanwhile, shareholders will be getting a final gross dividend of 52 cents a share. The company says it's now secured its banking license for its Old Mutual Bank and sees this vehicle as a key contributor to its future growth. Well, to discuss further, I'm joined by outgoing CEO Iain Williamson. Thank you very much, Iain, for joining us. So the headline revenue increase in the period under review was not exactly shooting the lights out, but given that you have many different businesses under your umbrella, perhaps you can unpack. Okay, he is. Iain, can you hear me?
Yes.
All right.
Yes, I can.
Let me go to the top of my question. So your headline revenue number, not exactly shooting the lights up 4% or so. But of course, you have many moving parts under the Old Mutual umbrella. Just perhaps give us a sense of what took place in your various businesses, your insurance, your investments, your in personal finance. So just give us a flavour.
So, sure, happy to do that. Good afternoon, everybody. The standout performer in our group for 2024 was our short-term insurance business, Old Mutual Insure, where we saw underwriting profits increase very materially to 1.8 billion rand and the underwriting margin up at 6.2%. So, and the other business units that really did well were our wealth business in South Africa, where we saw very material profitability increase, and as well as inflows from customers, as well as our private markets investment management business, where we had a record level of deal activity in the year in that business. So the profitability increases we're seeing have been more driven by the businesses outside of our central South African life business for 2024. I think the life business had a more difficult year from a revenue growth perspective because of the stress that we've seen consumers under over the year. I expect that to improve as interest rates come down, as the public sector wage settlement kicks in next month. I think we're very positive about the outlook for the business overall.
So based on your observations that you've made in your various businesses, what have your observations been around how the consumer's been faring, both in South Africa and the other regions that you operate in on the continent?
Yeah, I think it's been, as all of us who live in South Africa know, I think it's been incredibly tough for consumers. We've had a high interest rate environment. We've got very high debt to household income ratios, and those are not coming down yet. So while we've seen the interest rate cycle turn, we've seen fuel prices moderate, we've seen inflation come down, that hasn't yet converted into consumer confidence, and we're not seeing it convert into a reduction in consumer debt levels. So I think that will come, but it's a question of, I think consumer balance sheets are under so much pressure that they really need to just deal with immediate obligations, deal with getting their debt under control. And, once that happens, we should start to see a more positive outlook. Across the African continent, I think it's been a fairly similar story, except that in many countries, we've seen inflation run away rather than be contained, and we've seen currency weakness. We've seen hyperinflation in both Malawi and Ghana. So that's a difficult environment from a different perspective for consumers, really around managing the uncertainty around their monthly costs and how they think about that.
Yeah, absolutely. So on the insurance front, how are your businesses, or how is your short-term insurer dealing with the issue of climate risks, given the increased incidences of flooding and other sort of weather-related disasters?
Yeah, so in 2024 we were quite lucky. We didn't quite see the same sort of pattern as we've seen in previous years. But having said that, I think we've done quite well in terms of getting ahead of the curve on that. We built a flood model, which is accurate to sort of street level in South Africa. So geocoded flood risk down to street address level. And we use that for two purposes. One is to assist us in pricing risk appropriately for flood. but it's also assisting us to have conversations with the relevant local authorities around how they think about town planning, how we think about urban planning, how we think about construction permissions, and start to try to build in a system that tries to avoid the worst of that risk rather than take it on further. Obviously, as an insurance industry, we can only ultimately price what's commercially viable to price. So one needs to get to a situation where the wider ecosystem takes responsibility for ensuring they understand the situation and we don't do irresponsible things in terms of building new structures.
Yeah. Tell us about the two-pot retirement system experience that you've had since September the 1st last year. Obviously, you're a big player in the area of pension funds. So what kind of demand did you see for that particular benefit? How much did you pay out, etc.?
So in short, a lot. It was quite a big surge in demand for liquidity from clients in the fourth quarter of last year. It's dissipated quite materially since then. I think it was really just an initial rush. We paid out, now I'm having to speak from memory, we paid out 3.7 billion rand, I think, to customers across from that withdrawal piece across the group, and that was paid out to 177,000 members. We built an entirely digital claims process, and 98% of our claims that customers initiated in that regard came via WhatsApp. And I think the teams did a fabulous job. And in fact, the digital solution we put in place, I think, stands us in good stead to repurpose it for other uses later.
Yeah. So, Iain, now you've indicated that Old Mutual Bank has had its banking license approved by the Reserve Bank. You've installed a CEO and a board. So when does the bank actually start operating proper? And why venture into having a bank when there are already so many players in the system already?
So it depends what you mean by proper. From a timing perspective, we've already signed up customers. I'm one of them. I signed up yesterday. It took me 5 minutes to open my account, including all the FICA verifications, biometric verification, real-time link into the Old Mutual Rewards program, and I was able to cash in a bunch of my rewards to seed my account with a cash balance to start it off. So really great onboarding experience. I was super impressed. And I have both my physical card and my virtual card already, so all sorted in a very few minutes. That experience is only going to be available to essentially our staff initially, while we just test the robustness of the scalability of the systems in the back end, etc. And we will then progressively roll it out. So it'll go first as an offering to our staff, then as an offering to our existing transactional account holders who hold the Old Mutual Money account, which we offer to customers in conjunction with Bidvest. And then ultimately we will make the offering available to the whole of market. We anticipate that will be in around September this year.
All right, we wait and see and look forward to that. So lastly, Iain, what is your outlook for 2025? There are a lot of moving parts, both internally and exogenously. We have issues with the United States. We don't know what the ramifications could be for our markets and our economy. But what is your general outlook for 2025?
I'm positive and optimistic. I think it'll be better for South Africa than 2024. I think the uncertainties really do revolve, to your point, around the geopolitics and whether that creates a strain, either a rand shock or an oil price shock or something really unexpected happens in the broader global political ecosystem. I think the South African economy itself is in a far more robust position than it was a year ago for all the reasons that we know. Load shedding is down, interest rates are down, we've got wage settlements coming through, there's every prospect of further improvements in just ease of doing business and those kind of things. And I think there's real commitment from the business government partnership initiatives to deal with some of the network industries that should to help to lift economic growth. We've got prospects of the G20 and the B20 later this year. There's a lot of reasons to be positive. on the downside, as I say, there is that political risk. But I said to my colleagues this morning, I'm just glad I'm not in Europe at the moment.
Indeed. Iain, we know that you're heading out of Old Mutual. We wish you all the very best in your future endeavours, and thank you very much once again for speaking to us. That was Iain Williamson. He's the CEO at Old Mutual.